Well, what is the best way to day trade? There's 1,000 ways to day trade. I'm going to show you how I do it. Then I will do my regular weekly market analysis. We're going to look at the day trade of the week on IPHA and run a customized market scan to find the stocks that are worth day trading. All of that coming up in this week's Stockscores Market Minutes. So when day trading, most people that do it don't have a plan. They use commonly used indicators, so things that are available to everyone. They don't analyze trade data. And at the end of the day, most traders don't beat the market. They'll have spurts where they do well, but then they give back those gains when the market conditions aren't favorable. And in the long haul, they just don't last. Well, the thing is, data does not lie. If you have large amounts of data on your trading strategy, you really have everything you need to know for how to beat the market. The best traders in the world are using data to tell them what to do. Now remember, if you do what everyone else is doing, you will be average. In order to beat the market, you have to do things that most people are not doing. Let's take a look at my database of trading data. Now, I've been running this for a few years. This particular spreadsheet just goes back to the start of June in 2021. I have an indicator that I developed called an action candle. Now, an action candle is a situation where the stock is making an abnormal price move with abnormal volume. And we code that into TradeStation, and we can calculate it on any interval. So when I'm day trading, I look for action candles on the 2-minute interval. Well, the spreadsheet that you're seeing here shows all of the action candles that have formed since June 2021. You can see that there's over 20,000 of them. Now, this is what I would call the raw data. I am using this to further define my indicators to figure out what works best. And I call that my optimization approach. So in this page of the spreadsheet, you'll see here a whole bunch of settings in blue, and those are things that I can alter. So I can say I only want to look for action candles between 9:30 and 10 in the morning on stocks between $0 and $15, and you can see more and more different components of my strategy. These are all indicators that are inside my strategy. If you want to learn more about these, if you want to have access to this database, that requires that you be an active trader member of Stockscores. Now from this, I can see that on Thursday, the September 2nd, it found 7 valid trades, and they averaged a reward for risk of 1.62. That was at the end of the day. But during the day, they maxed out at an average of 6.6 reward for risk. Now, what does reward for risk mean? Well, if I risk $100 and make $200, then I have earned a reward for risk of 2. If I risk $1,000 and I make $4,000 on the trade, I have earned a reward for risk of 4. And so you can see that this strategy has what we call a positive expected value because it has a reward for risk that is positive, 1.62 at the end of the day, but during the day as much as 6.6. Now let's jump back into my TradeStation screen. So this is how I find my trades during the day in real time. I have in TradeStation something called radar screens that are running my customized indicator called an action candle. Now this middle screen here is where we calculate action candles on the 2-minute interval. I talked a little bit about that last week. Now what I did in the opening half an hour on Thursday is I grabbed all of the optimized action candles in the first half an hour, and I put them over here, which reflects the trades that I believe are the best ones to take. So out of all of these, only these passed the optimization process. Now this screen capture was taken at 11:41 in the morning, and you can see that there's a wide range of performance here. The top performing stock was RAAS, and at that time, it was up 10.8 times risk, and it had hit a maximum of 15 times risk. Now we also had a loser, MOGO, was down 1.4 times risk, and it had only maxed out at 0.11. Now I don't really worry too much about the losers. What I worry about is the big picture. How did all of these things do in average? And what I can see is that the average RR, if I were to add up all of these numbers and divide by 9, because there was 9 valid trades at that moment, well, that added up to, over 20 RR. So if I had risked $100 per trade on each of those, the profit would have been about $2,000. Now here is one of those stocks. There's the action candle. Okay, and if we go back to this previous screen, you will see that the action candle on RAAS triggered at 9:46. If I jump back here, I can see that this was the 9:46 action candle, and it went up sharply. It broke its upward trend right there. That would be our exit signal. Our entry signal was there. We make the difference. In this case, a move from under $5 to about 6.25, 6.25 or so. And that's in the course of a few hours. So that is my approach to day trading. It is not based on gut feel. It is not using indicators that most people use. It is using data, my own indicators, because the only way to beat the market is to do what most people are not doing. Hopefully you've enjoyed that. If you have questions about it, more information, just go to the Stockscores website under the trader training area, and you can learn more about it there. All right, let's get into this week's market analysis, starting off with the U.S. markets, the S&P 500 short-term chart. This is the 60-minute chart going back a month, and you can see that the S&P has been generally trending higher. We had this period in here when we had a little bit of a pullback, and the recent action has been more or less sideways. The large cap stocks have been building a base in an upward trend, and that's bullish. That means that we're likely to continue higher. If we were to break the upward trend line, well, then we need to get concerned. That hasn't happened yet, so we'll put a bullish rating on that. Long term, nice upward trend. You can see that it's been in an upward trend since the bottom of the COVID crash in March of 2020. NASDAQ also in an upward trend, therefore the buyers are in control. The Russell 2000 is lagging those larger cap sectors. You can see that we have not been trending higher, but instead trending sideways. However, in the past 2 or 3 weeks, we have been moving up there, and it's been a better market for short-term trading. I use the IWM as a proxy for short-term day and swing trading. If the IWM is moving like it was late last year into this year, it's a great place to be in terms of trading the market. When you're in a sideways action, it's going to be a little more challenging. The last 2 weeks or so have been better because we've been slowly trending upward toward resistance. Now, Canadian markets, you can see a little bit more choppy than the S&P, but still the buyers are in control. We know that because the bottoms are rising. So if we just jump back to this chart here, you can see that the bottoms are rising on the chart, and that is an indication that the buyers are in control. Looking at the long-term chart, the buyers are in control. We have rising bottoms on the weekly chart. TSX Venture has been lagging, much like the IWM has been lagging. The TSX Venture, those small cap stocks, have been moving lower, but they actually showed some life this past week with a little bit of a tick upwards. Perhaps we will move back into the upward trend that was making trading so good in 2020 and into the first part of 2021. On currencies, US dollar made that breakout 2 weeks ago, and then last week it's fallen back. It hasn't broken support yet, but sort of a false entry signal, I guess 3 weeks ago now, on that little breakout from a cup and handle. So I was bullish on the US dollar 3 weeks ago. I'm going back to neutral now because it does look like it's getting stuck a little bit. On Bitcoin, it has been really flirting with the break of this downward trend line. We've talked about this for a few weeks, and it's just hanging out there barely above the $50,000 mark, I believe, during the week, but just can't seem to break it. So it is going sideways. It is building a little bit of a base. If it can make a strong break of that downward trend line, then it can move back up toward that upper price resistance level. On Ethereum, well, this has been the one that actually has been doing the best of late. Really strong week this past week, now coming into resistance there. I expect a little bit more strength early in the week, and then it will probably get stuck at the highs from May. Now on to commodities. Here is the gold chart, and a little bit of strength in gold the last few weeks, but it has not yet managed to break the downward trend line, so we shouldn't get too excited about that. It is, however, building a pennant, and if we could break out of that pennant with a break of this downward trend line, well, then gold might be worth trading again. It's not there yet, but worth watching. On to oil. A little bit of strength the last couple of weeks, coming into resistance, but really looking like it wants to go sideways for a little bit. All right, on to the fear chart, and you can see that fear is relatively low. So my outlook then on US stocks, bullish on both time frames, Canadian stocks, bullish on both time frames, gold neutral, and oil neutral on both time frames. There's a few hot stocks every day. That little bit of strength in the IWM the last couple of weeks has meant there's something to trade every day, but there's also a lot of noise. And that's why I've really been focusing on those optimized settings for my day trading. Swing trading hasn't been super. It's the odd one is moving, but we're seeing more short-term moves right now. And really what you want to do is focus on stocks that surprise the market with strength. Gold and oil are doing better than expected lately, but they do face lots of resistance, so I wouldn't get too optimistic yet. Crypto is strong, but it is near resistance, and so it may find some selling pressure soon, and fear is low. Well, now we're going to jump to another example of a day trade. This one was from Friday, and this stock met the requirements of my strategy with that action candle touching off a nice upward trend. You can see the action candle here that triggered on my TradeStation analysis. And at that time, if you wanted to take $100 of risk, you would buy just 330 shares because it was such a volatile stock. Now that meant a position size of only $1,900, but because you can margin this stock 3-to-1, you would only have to put up $634 of capital. And this made a great move. Now the sell signal, because the trend went parabolic, the sell signal will be right in there at about plus 13 RR. That meant a $1,300 gain for a $634 position, astonishing 205% return on a one-day hold. All right, well, now let's jump into the Stockscores market scan. And many members of Stockscores don't realize that you can build your own scans to look for whatever you like. You have to get a little bit of a feeling for how each indicator works, and there is a help file on the Stockscores website to help you do that. It explains what each of the filters on the market scan do. But let's just build a little scan for day trading. One of the things that I like to do when I'm day trading is focus on stocks that are trading abnormal volume with very strong liquidity. So I can select this to abnormal volume and number of trades, at least 10,000, sometimes even better. And you might just want to eliminate the really high price stocks. So let's say stocks under $20. These are going to be the ones that give you the best bang for the buck. They're going to be trading abnormal volume, and because they have a lot of price volatility, they won't require as much capital to trade them. Now we can then look through these charts to see which ones are breaking out of trading ranges. There was 28 stocks that were trading abnormal volume and trading with lots of liquidity. Then what I would do is run through the charts, and I would typically do this on Stockscores in the opening hour to find my list of stocks that are in play, and then I would monitor them on my short-term real-time chart on whatever real-time platform I use. So here, for example, is Camber Energy. It's been in play the last few days. Now that's the daily chart. If I jump to a 5-day chart, you can see the really abnormal volume here. So there you can see that really abnormal volume. It started moving in here, breaking this downward trend line, and continues to move sharply higher on that abnormal volume. As a day trader, I'm looking for the breaks from patterns, the break of that pullback line, the action candle right there. Those are all the things that are going to really give it the life to day trade. And so that's just a little scan that you can run on Stockscores and just then go through the charts and look for the stocks that are really showing that strong volume and making price gains. Here's another one. UEC was in play last week. That's another place to look. And all done with the Stockscores market scan, pretty simple. And then you combine that with your real-time feed to find the entry points in real time. Hopefully that's been useful. If so, click on the like button, subscribe to the channel. Most importantly, trade well.